Hi, my name is Angela Fox, and I work with the Indiana State Library in the Library Development Office. One of my jobs there is to oversee the Indiana Public Library Annual Report. In this brief tutorial, we'll look more closely at Section 5 of that report, Operating Expenditures. Taken with other libraries on a state or national level, this section offers a snapshot as to how much money libraries spend and how they spend it. It's also an especially important section for us at the state level because we use some of the data here for our standards review. If you've had the chance to familiarize yourself with the report, you'll notice that the operating expenditures section is much lengthier than the operating revenue section that precedes it. Since we're interested in money flow in and out, why the discrepancy? There's actually a couple reasons. First, we're taking a pretty close look at what money is spent on, and libraries just have so many different expenses from so many different major categories. And of course, being a library survey, there's a focus on collections and holdings, and we go into quite a bit of detail about costs associated there. Another reason this section is so much longer is that we need to separate money into operating and non-operating funds in a way that we didn't in the revenue section. IMLS defines operating expenditures as the current and recurrent costs necessary to support the provision of library services. In other words, the amount of money it takes to operate a library. We're definitely interested in that figure here at the state, but we also need to figure out the amount of money spent solely from operating funds, and that has to do with the collection development percentage. I'll speak to the math part of that a bit towards the end of this tutorial when we reach that question, but just know that there is a reason that we make that distinction, and that reason is directly tied to trying to give our libraries the greatest chance of being in standards. Speaking of standards, this section is also used to calculate the operating expenditure per capita, which in turn is used to figure out your minimum non-resident fee. As I go through this section, know that because it is so lengthy, I won't be discussing every question, but only the ones that I get the most questions about. If there's something you need to know I don't discuss here, please reach out directly to me. My contact information is at the end of this tutorial. Question 1 is on salaries and wages. We're looking for wages that you pay before deductions and withholdings are taken out. Question 2 is on employee benefits. Between 1 and 2, you should be reporting how much money you're actually spending on keeping people on your payroll. Question 3 is on other personal services, and this is for employees who receive a W-2 from your library but aren't considered library employees. The most common example of this I can think of are attorneys or special counsel who are kept on retainer with the library. Skipping ahead a bit to question 7, we have professional services. And the difference between this and personal services is that these are people you pay, but they aren't on your payroll and they don't receive a W-2. This could be anyone from architects to program presenters and performers to grounds crews. This question is also especially tricky in that there's a couple other things you should be recording here, even if it's not as obvious. So this is where you'll also include any databases that are solely for staff use, so things used behind the scenes tools for your librarians, as well as any service fees that you pay for hotspots, whether those hotspots are for staff or patrons. Skipping ahead to question 12, this is repairs and maintenance. And the thing to know here is that this question is for recording the cost of materials only. Any cost of labor, that's going to be reported back on question 7 with professional services. The next block of questions is about capital outlays from operating funds. Most of these cover expenditures on large capital projects, and they are expenditures only from operating funds, so no LURF, no rainy day. If you're using non-operating funds like those, which is a lot more common with this sort of project, you're going to be reporting them later on in the survey in question 44. Question 22 is for public access computers, e-readers, and electronic media devices. These are things that patrons could use to access your collections, but they're not really part of the collection. They don't circulate, they don't leave the building. If you have laptops or Chromebooks that you allow patrons to use in the library but have to be returned to you before they leave, those would be recorded here. Money reported here is counted towards your collection development expenditures. Next up are questions on the materials in your collection. And here's where we see a clear split between operating and non-operating fund expenditures. This first block being solely on materials purchased with operating funds. Going ahead to question 27, we have electronic physical format, and that might seem similar to question 22, but while 22 was about items that were meant to be used in the library to access the collection, these items here in question 27 are part of the collection itself. So if you had Chromebooks or laptops that patrons can check out and take home, they'd be counted here. This is also where you record things like video games, Fox, and Wonder Books. And if you circulate hotspots, you'd record the cost of that physical hotspot here. Now, if this block of questions looks familiar, it's because they're the exact same questions you just saw, only this time we're asking about library materials purchased from non-operating funds. We follow the collections questions with a whole slew of automatic calculations where we add your operating and non-operating funds together to get grand totals for various material types. And that's followed by even more totals. Question 43, total operating expenditures, is the total amount of money spent from all funds on all things. So this is the total money your library spent in 2023, period. This number is reported to IMLS. I mentioned question 44 in passing earlier, the total capital fund expenditures. This is the space for you to record the amount that your library spent from non-operating funds on capital expenditures, money spent from LERF and rainy day. It's usually from a special appropriation for a large project, so things like buying land or purchasing a vehicle, building a new facility. We'll ask you about the revenue that funds these purchases in section 6. Don't worry, we do not expect the amount of capital revenue and capital expenditures to match up. Question 45 on the total collection expenditures, it actually totals the amount your library spent on collections from operating and non-operating funds. I'm going to skip ahead for a moment to question 48. We divide the total amount of money you spent from your operating funds by the number of people in your service area, which is back in section 3. And we do this to come up with your total operating expenditures per capita for 2023. This is the average amount of money your library spent per person in your service district. This number, calculated from your 2023 spending, represents the minimum you should be setting your 2024 non-resident fee for to be in standards. Going back then to question 46, there we go. The total 2022 operating expenditures per capita, this is not a typo. We are going all the way back to 2022. So we pulled this number from last year's report. This number is what the answer to question 48 was last year. This operating expenditure per capita in 2022 was the minimum your non-resident fee needed to be set for in 2023, which is why in question 47, the survey calculates the difference between what you reported your non-resident fee being in 2023 versus what the survey told you in 2022 that you needed to set it. As long as the calculation comes out to be a negative number, your library was in standards for the year. Finally, the section ends with question 49, the collection development standard. This is the primary reason that we have you go to the trouble of separating operating from non-operating fund expenditures. The code says that 8% of the money a library spends has to go towards collections for that library to be in standards. However, it is actually a little more specific than that. It says a library has to spend 8% of the total amount it spent from operating funds. So we're able to take any money that you spent on collections, be that from operating or non-operating funds, and then we divide that by the total amount spent only from operating funds. By doing it this way, we're dividing the largest possible amount by the smallest possible amount, which gives you the highest possible percentage, and it gives our libraries the highest possible chance of being in standards. I know that was a lot to cover in one section and one tutorial, so if you have any questions, again, please don't hesitate to contact me. My direct information is right there. Otherwise, if I'm not available or you wish to speak to someone else, just reach out to the Library Development Office using that toll-free number or the email on your screen.